Hey everybody, this is David Skrika. So we're gonna look at some of the market stuff here. It's like 5 a.m. here in the Bahamas, and I'm having problems sleeping because the power's been off. There was a big rainstorm came through, then the power's been off. And unfortunately, that's going to happen more here, as you know, because they have these old crappy. This is one problem in the Bahamas. They have these old crappy diesel power plants, and the price of diesel is going to go way up. So I think they're going to probably have more of this kind of thing happen. I'm starting to move over to a solar system, and I'm not some green fanatic, but here it just makes economic sense and practical sense because the power is not even reliable normally. So sorry, just having a sip of water there. So yeah, we're going to look at the markets. So what I'm going to do with this today is we're just going to look at what's happening, maybe what can happen in the next few months. Then I'm going to do my series of videos. So I'm going to delay the launch of the newsletter from a week from now to May the 15th. Sorry, March the 15th. For a number of reasons. Right now my website's unsecure. I just have to change to something called the SSL, just a back thing, and that will secure it. So I don't want people putting down their credit cards on unsecured site. And then also I'm going to give you all this content. We're going to recommend a number of small cap stocks and maybe a couple large cap stocks, give you some ideas. So I'm probably going to do about five stocks that we'll put on our watch list. And then after that, we will do that as and then I'm going to have like 20 or 30 stocks in total on the list, but you're gonna have to subscribe to the letter to do it. Those of you who have lifetime subscriptions, as I said, you'll get the regular letter or it's going to be more media oriented. It's going to be more, this is the way I think the way the internet's going anyhow with this kind of information. We're looking at, doing stuff like this more with, video, podcast, etc. And then just quick written updates. So anyhow, and I know for me too, I can express myself a lot better and give you a lot more information in a lot quicker time by doing these as well. So this is the decision point page on the stock charts. So here we can see that the market broke to a new low. Basically, we got a bunch of round numbers. It's about 4,200 on the S&P, about 13,000 on the NASDAQ, and 33,000 on the Dow. The NASDAQ and the Dow actually broke that. The S&P went right to it. You see 4,201. Now we got really oversold. The VIX got to 36. So I could see a small bounce here, but it's just in light of these shocks going on in the energy market due to the war in Ukraine, I think it's going to be very difficult for the market to have any sustainable rallies. And if you look at the Fed fund futures, one thing that's interesting about this, okay, there's no half point rate hike happening. But what's also kind of interesting about them is they still have 4 rate hikes. So the future's going to just over a percent, happening by the end of, by the end of the summer. I don't think this market can handle that. So I think it's like a catch-22 where, okay, if you get this war continuing to escalate in Ukraine and going on, these energy prices and commodity prices are going to stay high, and maybe the Fed's not as aggressive, but inflation is going to kill us. And then if something happens and there's a ceasefire and maybe they loosen the sanctions for things like grains and energy and stuff like that, maybe inflation comes down, but it makes it more likely the Fed will continue to tighten. So I think you're basically either way right now not going to see higher equity prices, and we saw such a bubble from the bottom, here. And you can see here, this is the stocks above the moving averages. We're not at these extreme levels, like, less than 38% of stocks, or less than 40% of stocks on the S&P are trading above the 200-day, above the 50 and 20-day moving average. But that's not like the extremes that you often see at market bottoms. Like if we go look, if you hear me clapping once in a while, it's because it's pitch dark in here because of the power outage, and I got 1 or 2 mosquitoes in the house, so I'm slapping at mosquitoes. But anyhow, Yeah, you can see that here. And yeah, and you can see the advanced decline line. It's actually, you see the advanced decline volume hitting a new multi-month low, actually the lowest in way over a year, breaking down, and the advanced decline line not doing that well. You can see again the new lows have started to spike up, but nothing, that's the kind of thing you see at the at a big bear market bottom. So like we're getting there. This is the RIDEX asset. This shows like the amount of funds in bull funds or bullish funds compared to bearish assets. And you can see this is nowhere near, again, where you would hit at a bottom. So I don't know if we're going to see a thing that, they shut down the economy in March of 2000, but it is kind of similar in that we're seeing this big shock to the system. And I think the market really has to, adjust to that. Because if we go look at the price of oil, you can see maybe the candlestick is suggesting a short-term top, but we're up another $2 overnight. And we're just like, first of all, we know that we've been moving higher in oil for a while, obviously, since the oil turned negative. That was the crash right there where the cash in oil went back to about 10, $20. And we've been moving higher for a while, and there's numerous reasons. You can't print all the money that they printed. The economies have more normalized after the end of basically, the end of COVID, and then bad energy policies in places like the United States and Canada, and less supply on the market as well. The biggest issue is always money printing. That's no one wants to talk about that because of the war and COVID, et cetera. But you just can't print the amount of money they did and expect this, to do whatever. So now we're seeing other commodities beginning to, as well. You saw this see copper drop, but copper went to a new all-time high on Friday, and he touched $5 yesterday. So we're seeing all these supply chain disruptions, and again, that's another issue the Fed's having. That in 2020 and 2008, when you had these crashes in the markets and you had credit markets seize up, they happened in kind of like these deflationary environments where everything fell. Well, now you're seeing this kind of inflationary, stagflationary environment, and of course, and I think like not enough is being made of the move in wheat, because that is going to affect countries actually a lot more, especially in the emerging world, more than it does copper, right? Or or oil and gas and this sort of thing, right? I think this is a huge deal. So, but like we're really going to talk about the markets here because we have been trading. You can see the S&P again, that intraday low just before the war. The futures are up a little bit. Let's go take a look at the futures. By the way, a great website if you want for futures is this barchart.com. You see the Dow futures are up about 80. Pretty small moves after the big sell-off yesterday. Well, now 67, whatever. 70, 80 is pretty, doesn't really matter. So anyhow, I think we could see a little bounce, but with this and this kind of breakdown of support, like one thing about the Dow, more so than the S&P, especially let's go get a 2-year chart and you'll see it here. The Dow, the kind of line in the sand was about this 33,000 area. If you can see, actually really going back to May, June of last year, that 33,000 represented support. Now we did dip below it here, but it was like, we didn't close below it. That was a reversal day. So we kind of closed below it. Now we're only a couple hundred points below it. So I would really say you got to go say below 32 to confirm it. But you can see we're below the moving averages. We're rolling over now. We haven't been below the moving average since like June, July of 2020. So I think that we are in this bear kind of market. So, NVDA, which is one of our shorts, you can see it's broken its moving average too. Again, right at kind of its support level here at around 210, it's at 213. So a stock I just added as a short, and you'll hear in my podcast, which looks like it's starting to break. Now, I only added a very small position because I may add more on a bounce, but I think Boeing may go bankrupt in this market cycle. I know people may think that's crazy, but we saw it happen with GM. I think it's the GM in this cycle. Boeing has $56 billion in debt. So I think, and look at Boeing is, as recently 2012 was $50. So that would kind of be where I think it could go back. Went under 100 during the 2020 thing. And then obviously they do have military contracts, which will be good now because of the war. Boeing obviously still is a major, is the 737s, the 787s. They do commercial aircraft, and at high oil prices, there's just going to be less travel and less demand for that. So, and their debt has exploded. So, this is a stock I would definitely look at here. And then, so what I'm going to recommend you do here is sell some of your Apple puts. We did pretty well in these Apple puts. Apple did, it hit here, and Apple could still move down, but Apple's going to be kind of the last man standing, right? This is like the most widely owned stock in the world. And I'm transferring them into the Boeing puts on any bounces and JP Morgan, because it looks like, I think what I'm going to talk about here, like we're going to have some kind of issues in the banking sector. If we look at Credit Suisse, Credit Suisse is back almost to the 2020 lows. Deutsche Bank has rolled over extremely hard. Not that close to the 2020 lows, but still much lower than when it was 6-7 years ago. And I think that they have much more exposure to Russia in Europe and this sort of thing. So I think this is where you kind of got to look. And the CDS, the credit default swaps, are blowing out on these. And there's a good chance that Russia will default on their debt. And you have to look at it from Russia's point of view, regardless of what you think of the war. But from a pure financial point of view, you've just had massive sanctions put on you. These debts from the countries that you owe to these banks, from the countries that basically just put sanctions on you to cripple your economy. Well, why would you pay those debts off? And the Bolsheviks did this in 1917, 1918. They defaulted on all their international debts, because they were communists and they didn't believe in paying bankers interest, Anyhow, so, and the casino stocks that killed, Penn, which we have a small put position on, is right back to its lows now. Of course, higher oil prices mean maybe less people traveling, also less disposable income to gamble, et cetera, et cetera. So I think that that's kind of what you're going to see. I know these companies are getting sports betting, but it's still the brick and mortar people going to the casinos are the major part of their businesses. And you can see what Penn did during the financial crisis, right? Or the 2020 panic. I mean, the COVID crisis, went down there. So, that as well. And also another thing, going back to NVDA and chip stocks in general, is Ukraine is the largest producer of what's called neon gas in the world. And neon gas is needed for chip production. Now, you can replace it with other things, but that would take quite a while, probably 6 months to a year to develop, a replacement. So I think NVIDIA is a great, and all these chip stocks, I think you're going to start seeing them talking more about the supply chain even worse. And I think Ukraine, when I say they're the largest producer, I think they produce, it's not just like, they produce 30%. They produce like 70 or 80% of neon gas in the world, right? So anyhow, I think that's something really to kind of look at. So the one stock I want you to start looking at, and it's breaking down too, and it probably will go lower in the bear market, but is I really love longer term. I'm a bull in India, and you can see India's come up again huge since this. So I would still want this to drop a little more, but this pays a nearly 12% dividend and has over the years. So even though this maybe hasn't had the hugest capital gains, if you bought this like 10 years ago, I'll show you where it was. We'll go 11 years ago, sorry. Yeah, you bought this in 2020, you still did okay, you more than doubled your money, but you're making like 12% a year in the dividend as well. So even all these years where say maybe it lagged, you're making that. So I would hope that maybe this could get back to, 13, 14, something like that. That would be a 30, 40% decline off the top. And if that were to occur, I would really look at that. And then there's other things like I like these telecom companies, like you can see Argentina Telecom or Telecom Argentina has been killed. These are another stock I look at. Obviously, we own TKC. Obviously, in the small positions we had in Russian stocks are a write-off at this point. So there's TKC. These are the kind of things I like. There's Telefonica, it's the Spanish company. Yeah, there's Vive, which is the Brazilian. Believe it or not, the Spanish company, which you can see has gotten killed too, pays a higher dividend than the Brazilian company, which is incredible. So you can see this is, gotten killed too in the last few years. And when you buy something like this, like I would hope it could go back to 3 or something. So this is not a recommendation or not a watch list, but you're really just looking for the dividend. Now, if it can go back into $8 or $9, fantastic, right? But really a company like this, you're just looking to get your 10, 12% a year and, you get cash flow and the whatnot. So anyhow, so to go back to the market, we can see that the VIX, at 36, the problem is this. Now that usually would mean you're going to get a nice rally of a few days, a few weeks. But when I look at the chart, it looks to me like we could be building a base in the VIX, similar to kind of we did in 2019 when, really this kind of 25 area became resistance. And then during COVID, we broke out to some crazy level. In 2018, the same kind of thing happened here. When the VIX trade kind of blew up, and you can see where it also went, anyhow, here. So I think we're going to see a trade similar to that first quarter of 2018 or 2020, when probably the low in this, or intermediate low, or this first phase low, maybe this bear market, the VIX is probably going to go above 50. And depending on how bad the commodities crisis gets in the short term here, it could go back to that 80, 90 level, 70, 80 level. So and part of the reason too, you're going to see actually with the Boeings, like I mentioned, Boeing and JP Morgan, they're both Septembers I'm buying in the puts. I'm now buying puts way further out. First of all, the premiums are higher because the VIX is 36. And second of all, because of the VIX is high, I think there could be rallies coming forward. So like I don't mind holding like my pens I own are Aprils. We own some Mays from NVDA. We own some May Junes for RIVN. I'll show you that chart in a second. So I don't mind doing these things, but anyhow, but I want to own like further out because I think there could be vicious rallies now, and I'm really looking at now. I think we're kind of the bubble's bursting similar to the Nikkei in 1990. And really, there was a first wave down, which went into about April, which I think we're doing right now. And then there was a good sized rally. And then there was a second wave down into the fall. So that the thing about owning those puts that are further out, that you could even hold them through the rally. I'd probably sell more in this first wave down and look to add more in this in the fall. So you can see RIVN is totally, I think this is this company is a complete disaster. They already tried to raise prices, even though they can't even produce any cars. So, and it still got roughly the same market cap as Ford and GM. So this is, if you go look at these IPOs, if you remember remember when Fitbit was the hot IPO, we're going to go look at Fitbit. Oh, what just happened? I think Fitbit got taken over. That's right. Yeah. I'm trying to think of one of those old IPOs, but those hot tech IPOs, et cetera, they all just kind of come out and then they go down. Uber is a perfect example. Actually, we'll look at that. Yeah, Uber came out in 2019, and actually Uber held up pretty well. I shouldn't even say that, but you can see here. Look at what Uber did during here. Like that was during COVID granted, but even when it came out hot at 45, went straight to 25. That's what all of these IPOs do. And at least Uber's got revenues in a business. Like Rivian doesn't even have any revenues, So, and then obviously, oh, sorry. We're also short Moderna. I think this is another disaster. I think now we don't even hear about COVID anymore with the war in Ukraine. No one's getting booster shots. There are a lot of things that come up about maybe it has mixed in with your DNA, et cetera, which they said that wouldn't. The Moderna CEO sold a crap load of shares, erased all his social media. So what does that tell you? What he thinks is going to happen? So I think this is another one that can just kind of crumble away. And if we look at Moderna before COVID, this was a $20-25 company. They didn't really have anything going on. So now with selling a lot less boosters, like there's no reason I don't think this can't go back to $50. So anyhow, that's about it there too. And now, I think I'm going to leave it at that. I think I'll talk about gold and precious metals and some of the commodity stocks more in another thing. But yeah, I just wanted to show you, okay, the VIX is high. We are a little oversold in the markets. Again, let's go look at the futures. Futures are up a little bit, nothing much to note of. So we could see a short-term bounce, but I think actually either, into the Fed meeting late this week, early next week, we will dump into it. Or if we do hold up, we'll dump afterwards. So, well, and another thing too is to really look at is, again, we look at, let's go look at a longer term chart, something like this. Like these stocks right now, like look at this. We can see like this 200 to 210 area is kind of the line in the sand again for NVIDIA. And if it breaks that, it's like, boom, the next support level is like 125, 125, 130. It's like, it just looks like to me at some point we could see like a pretty big smash here in these things, and if that's the case, things could get, ugly pretty quick as well, so anyhow, I'm going to leave it at that. And, yeah, and like, our puts, it's like kind of like printing money right now. I don't want to get complacent, but like, it's like, yeah, we bought Moderna, boom. We bought Rivian's, we bought May 50s in Rivian. It's when the stock was 65. The stock is now 44, or 42, I think, actually. Yeah. I personally, I didn't do it as a RICO because it was a risky trade. I just said, what the hell? I bought 30 more pens at 30 cents. They're up to about 50 cents now. I own 40. My average price is about 40, 50 cents. And it's like, so I don't like it when it gets that easy, but it's just like, yeah, you buy these stocks and, Moderna, again, I bought, I think I bought the 125s and the stock was like around 150. Now already the stock is already at 126, it gets to be a bit easy, but it's just like, like Moody's, for example, I don't even look at the stock. Usually when I got puts in a short, I look at stuff 4, 5, 6 times a day. Moody's, I don't even look at it. Like around 350, 360, we bought the December 300s. It was a longer term play. And, the stock is already 314. I'm telling you, I do not even look at it because I think with credit problems, like Moody's is $100 to $150 stock, Ford just broke the 200-day moving average. We own the 14s, the September 14s, So, and I bought this, we bought puts on Ford at around 22. And then we covered, we sold here, and then I re-added, further outputs with a lower strike price. So, and you really see kind of what it's like to be in a trend, right? When you're in a bull market trend, people just sit there and they own stocks and they think it's easy. We'll go back to Apple. Anyone who owned Apple in the last, like 5-10 years has been a no-brainer. You just own it. Apple's gone from 40 to 160, and people don't think it can go down. So, but so you have to watch that complacency too, being short when it starts getting too easy to be short, because at some point there's going to be an inflection point and markets will become oversold enough. Anyhow, that's it for now. I hope you'll hear my voice. I think my voice is about 90% there. It's still a little hoarse. I'm a little tired. I'm not as high energy as I usually am because, like I said, the power went out. I've been up since 2 in the morning. It's 5:30. So anyway, everybody take care. And I can hear my cat wants in the house. So I gotta let her in. So that's good timing to end off on.